Yeah, good morning, everyone. So yesterday we saw a mixed market in the US, wherein the old stock moved up and Dow Jones was up, whereas Nasdaq was down, mainly driven by corrections in the semiconductor stock, specifically Nvidia. So that has given a mixed reaction over there. But today morning, futures are marginally positive, and also Asian markets are also indicating positive trend. We had seen dollar index correcting yesterday and also further down today. So that has taken market positive yesterday in the daytime, and also today we are seeing positive opening with that respect. Uh, Overall, commodities are also more of a flattish, though oil is up by around $0.5, but other commodities are more of a flattish. Only iron ore is down by around 0.5%. So more of a positive start, and thereafter we expect market to remain in a range. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, the market is likely to open on a flattish note, and we're likely to witness some range-bound trading session during the day. Yesterday, we have seen that the Nifty was facing a strong resistance of 23,550 levels on the closing basis, but somehow managed to maintain a flattish closing. Going ahead, as of now, 23,600 will act as a crucial resistance level. If it surpasses that level, then more upside can be seen towards to 23,640 to 23,700 levels. Whereas on downside, 23,470 is the first support level. If it's break that level, then we're likely to attract some sort of a profit booking, which might take a Nifty towards 23,400 to 23,340 levels downside. But definitely, it's a stock specific market. Mid caps, small caps are really doing very well. So one should be more concentrate into the stock specific trading rather than the Nifty or the Bank Nifty trades, because those indices will remain volatile till the budgets comes down as such. Coming towards the Bank Nifty, yesterday we have seen a positive closing on the Bank Nifty, maintained about 51,700, which gives some sort of a positive sign. On the technical front, we believe that 51,300 is the first resistance. Sorry, 52,040 is the first resistance zone. Any more above that level, we expect a more positive momentum to be carried forward towards 52,300. Whereas on the downside, 51,300 and 51,000 are the crucial support levels we need to keep eye on. Coming towards the Fin Nifty, 23,200, 23,300 are the two resistance level, whereas the support is placed at around 22,900 and 22,800. Stock specific, Navkar Corporation really looks very good on the technical front. We believe that the stock has given the breakout of the consolidation breakout with the good decent volumes, so one can go for a long positions. Currently, the stock is trading nearby 117 to 118 levels. We are looking for a target of 127 with a strict stop loss of 112. That's it from my end. I request Nirav to take the call forward.
Yeah, thank you, Swati. On the derivative front, the data, slight positive thing in the on the data is that we are seeing put built up now again after a few days of from 23,600, 23,500, 23,400 odd put strikes, which is a positive. Also we have closed above the 23,500 level, so the PCR above on that strike is above 1 as well. So these are the positives. The only real negative is the VIX has increased slightly. From 12.5, it has moved up to 14 levels. And that is area of concern. Other than that, nothing much to talk about. The overall data is positive, and we should continue to witness further buying. Now for buyers, 23,400 should be your stop loss for longs. Nifty is likely to reach 23,700, 23,800 odd levels going forward. From the stock specific front, Voltas continues to witness price volume breakout, a good run. There's an open interest breakout in this particular stock as well. So there is a likelihood that this stock will do well. Other than that, as I said, most of the banking names continue to do well, and private banks especially are doing very, very well. They can still move up another 3-4% from current levels. So the likes of Axis, ICICI, HDFC can do well going forward. So look out for the same. They can give good returns. Yeah, so that's it from my side. Like to other fundamental.
Good morning. Amara Raja Advanced Cell Technologies, which is a subsidiary of Amara Raja, has signed a technical licensing agreement with GIB Energy Slovakia. As part of this agreement, GIB Energy will license its world-class LFP technology for lithium-ion cells. So positive for Amara Raja. RBI has appointed Mr. Arun Kumar Singh as a Chief General Manager, who was earlier the Chief General Manager at RBI, as an additional director in the board of Bandhan Bank for a period of 1 year. So typically, previously also we have seen that whenever RBI inducts its own person on the board of some other bank, then that has led to subsequent exits of senior management personnel from those banks. So this seems to be a negative for Bandhan Bank. Also, bank has continued to see deteriorating books, especially on the MFI side, for many quarters now. So probably that's the reason that RBI has inducted its person in the bank. And lastly, yesterday during market hours itself, this news came out that Sangvi Movers has secured two work orders totaling to 180 crores. First one is wind EPC covering entire package of providing cranes, trailers, as well as installation and commissioning of services, including civil, electrical, site management. So the complete package for EPC of wind plant. And this project is to be completed in 10 months, and 95% of this order will get executed in FY25, that is current year itself. The second order introduces a new business offering in the hydrocarbon sector, which involves above ground piping work, fabrication, painting and erection, including supply of manpower and necessary tools. So this marks Sangvi's entry into hydrocarbon sector as well, so which is also positive. And again, this order will get executed within 6 months, so this year itself. So we think that with this couple of orders of 180 crores, the company is on track to achieve its targeted revenue of 200 to 250 crore for the EPC segment in the current year. So we remain positive on the stock. Thank you.
Good morning. On the IPO front, today Allied Blenders and Distillers Limited IPO is opening and it is closing on 27th June. On the upper end, the price band is set at rupees 281, and the total issue size is of rupees 1500 crore, which consists of 1000 crore of fresh issue and offer for sales worth rupees 500 crore. Funds from the fresh issue shall be utilized towards the repayment of the debt worth rupees 720 crore, and the rest for the general corporate purposes. Post issue, the market cap would be rupees 7,860 crore. We are neutral on the issue. The company is incorporated in 2008, which is an Indian-made foreign liquor company, and it is one of the 4 spirits companies of India. It has a pan-India presence in sales and distribution, with an estimated market share of 11.8% in the Indian whiskey market for FY23. This is in terms of sales volume. And as on December 23, it has a product portfolio which comprised of 16 major IMFL brands across whiskey, brandy, rum, and vodka. The company generates 97% of its revenue from whiskey, and its flagship brand, Officer's Choice Whiskey, commands a substantial market share that contributes around 60% of the overall whiskey sales. And the other brands such as Officer's Choice Blue and Sterling Reserve contributes around 18 to 17% of the whiskey sales. In terms of geographical performance, domestic market contributes around 98% of the overall revenue, while the rest is from the international market. Company's revenue has grown at a CAGR of around 13% between FY21 to 24, which is at the lower end when we compare it with the peers. Further, the company is aiming at premiumization in order to gain the market share, where it has recently launched a product in its premium segment, that is Zoya, Special Batch Premium Gin, which was launched in Jan 24. This was to drive its growth through premiumization. And with this, it has a total 5 brands in its premium category. However, the company is still not available in the high growth luxury segment. The issue is valued at 32 times to EV by EBITDA based on its 9-month FY24 financials, which is believed to be fully priced when compared with the average peers valuation of 36 times. And also, as they don't have any brand in the luxury segment, and in terms of sales and marketing cost also, it has a lower spending as compared to peers, which stands at around 7% against the peers average is in the range of 12 to 14%. So we expect that in the future it might affect the EBITDA margins. Thus, we recommend neutral to the issue. Thank you.
Yeah, another issue which is opening today is Viraj Iron Steel. In fact, this is a secondary steel manufacturers in secondary steel manufacturers in the state of Chhattisgarh, Raipur. The issue is priced at 195 to 207. And the issue size is at 171 crore. Here again, recommendation is neutral. Considering that company do not have any backward integration, they are buying iron ore and coal from the local market and convert and sell it to the manufacturer sponge iron, billets and wire rod and sell it in the market. Company has very basic business structure, so nothing so special in it. Only thing which can act positive in the future is that the company is expanding the capacity from 2 lakh 31 to 5 lakh 5 lakh 1,000 tons, so almost doubling the capacity, and which will be starting in next year first quarter. So that can increase the revenue and profitability in the FY26. But for the near term, as we see that sponge iron and billet prices are correcting in the near futures and has corrected by almost around 2,000 to 3,000 rupees. So that can put up some pressures in the near term results of the company. So as such, and also the valuations, if we compare it with the like Prakash Industry, then the valuations are also a bit costlier than the Prakash Industry, whereas the capacity is one-fourth of that company. So recommend neutral on the company. That's all from us, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday there was a lackluster in gold and silver. Prices were consolidating. Today we might see some prices testing 71,400 to 350 levels, whereby support should be hold on, and we can see a pullback till again 71,800 to 72,000. Silver also prices should hold the support area at 88,700, 88,500, whereby some pullback is expected. So buy with a stop loss of 87,700. And on upside, it can test 89,500, 90,000 on upside. In metals, there could be some pullback. So the copper July contract, one can initiate a buy with a stop loss of 244. On upside, we are eyeing for 255 256. Similarly, zinc also expected to test 260 to 62 levels. So by around 257 with a stop loss of 255. And crude oil prices are expected to trade positive as long as it is holding above 67.70. So by around 67.90 with a stop loss of 67.20. And on upside it can test 68.50, 6900. And natural gas prices are expected to test 240, 245 on the upside. So prices have already opened, gapped up. One can initiate by around 230 to 28 and maintain a stop loss of 220. That's it from us. Thank you very much.